Hello, and welcome back to Explain the Charts. Today is May 5th, 2025, and we're analyzing the AUDUSD pair, combining news and chart data. Recent headlines point to fresh 5-month highs for AUDUSD, fueled by trade optimism and solid U.S. economic data, which aligns with a weaker USD. Anthony Albanese's Labour Party victory in Australia also contributes to stable economic policies, impacting the pair. We'll explore the influence of RBA's interest rates, iron ore prices, China's economic health, and overall market risk sentiment on the AUDUSD. We will also look at news of the Australian dollar having plunged below 60 US cents in April of 2025 due to tariff fears. Let's start with the one-day chart. We can see a broad overview of AUDUSD's price action over the past year and a half. We are now in an apparent uptrend after a period of consolidation. Looking at the daily chart, we see a recent surge in price, confirming the news reports of hitting a 5-month high. This surge appears to be approaching a resistance level near 0.647, previously tested in late 2024. A break above this level could signal further bullish momentum. Now, switching to the 1-hour chart for a closer look at recent price action, we can zoom in on the last month or so to gain more detail. We can see a clearer picture of the recent upward momentum leading up to the 0.647 level. On the 1-hour chart, we see the price is near the top of the recent rally, as opposed to the daily chart. A slight consolidation is occurring on the 1-hour, meaning that the prices could continue to move upwards if momentum continues. Focusing on the most recent candles in the 15-minute chart, from April 30th to May 2nd, we see tighter price action, suggesting consolidation. We may see some resistance around 0.641, though 0.642 to 0.643 may be more challenging to the price action. The 15-minute chart shows that the prices have been holding relatively steady. But the 15-minute chart has also been fairly consistent at holding in a relative range, indicating there will be resistance at either end. So, where do we go from here? In the short term, monitor the 0.647 level. A decisive break could open the path to higher targets, perhaps revisiting November 2024 highs around 0.668. However, failure to break 0.647 could lead to a pullback towards support levels around 0.644 or 0.641. Longer term, central bank policies remain a key factor. If the RBA maintains high rates while the Fed slows down cuts, we could see continued AUD strength, but this also leaves it vulnerable to significant downside if economic data weakens in Australia. Keep an eye on the economic data releases scheduled for the coming days, like building permits and the AI Group Industry Index, as these could provide further clues about the direction of AUDUSD. Also, keep watch of developments in U.S.-China trade relations. Any escalation or de-escalation of trade tensions could significantly impact market sentiment and, consequently, the AUD, which is seen as a proxy for Asian growth. Overall, the AUDUSD is showing bullish signs in the short term, but the long term depends on a multitude of factors such as central bank policy and geopolitical events.